that just the thought of buying a home right now must feel so overwhelming and honestly just feels so out of reach, especially with all the costs rising and the interest rates, prices rising. It just feels impossible, especially when you're just starting out or you're just starting a family and you want to be able to say that you bought a home and you own your own space, and you probably already feel super cramped where you are already, but you can't even begin to imagine that it's possible for you to buy a property. And if this is exactly how you feel, then you're in the right video, because I'm going to be breaking down my 5 simple step plan that will help you from feeling stuck to being a homeowner in New Jersey by the end of this year. Hi there. My name is Gabby. I'm your mom friend in real estate here in the New Jersey suburbs. I make videos every single week about everything real estate and also my experience as a mom living in the New Jersey suburbs. So if you're new here, welcome. I'm so excited to have you. I hope that this give you a clear path and just an overall game plan so that you have a direction and you don't feel stuck where you are anymore. And with that, let's get into it. This simple 5-step framework that I am going to be talking about in today's video is honestly something that I walk all my clients through every single day, especially my buyers. Whether you are just a first-time home buyer and currently renting, or you have outgrown your space and want to buy another home, but you just feel like with today's prices, interest rates, it just feels impossible because when you bought it, everything was just not this pricey. Before you do anything else, step 1, honestly, is getting clear on your budget, the lifestyle that you want to live wherever this new home is going to be, and what is your timeline? When do you want to move by? I believe that this is probably the most important part. Budgeting is very, very important, especially if it's your first time owning a home. There's so many moving parts that go about buying a property. It's not all about just attaining the home, saving for the down payment and closing costs, working on your credit so that you have the best interest rates possible, and making sure you have a stable job. I used to focus a lot on that, what you need to do to buy the house. But now that I'm a homeowner, I know how it feels firsthand, how important it is to budget. A lot of the times, once you speak to a lender, the pre-approval they give you is the maximum amount that you can be approved based on their guidelines as far as their income, their debt to income ratios that they're looking for, how much you're making. But it's possible that there are certain monthly debt obligations or certain things that you're still paying off that is not getting factored into their calculations to approve you for this mortgage. The last thing you want to do is overstretch yourself just because on a piece of paper it says that, let's say, you're qualified for $650,000. So what you want to ask yourself is, how much can I comfortably afford every single month to spend on a house? And remember that while you have a set monthly mortgage payment that you're going to be making every single month to the bank, and typically that already includes the principal, interest rates, taxes, and home insurance, HOA if you're living in a community that requires that, and any PMI that is required for you to pay because you didn't put at least 20% down. There's also utilities that you have to pay for. And a good rule of thumb is to allot about 1/3 of your monthly income to your housing expenses. And don't forget that you also have to budget for down payment, closing costs, moving expenses, furniture expenses, and any renovation expenses that you want to do to make the home feel more like yours. And I would also add on to that to have at least an emergency fund for yourself that are 3 to 6 months of your living expenses, just in case there are any unexpected things that come up now that you own a home. I can do a whole video on budgeting, but I know that we have to move on to the next one. So lifestyle. Once you put together a clear budget that you want to stick to, you also want to start asking yourself, what is the end goal feeling that I want to feel when I buy this new property? What is the lifestyle that I want? Do I want a more luxurious type of living space with not a lot of maintenance and has a lot of amenities? So maybe a townhome or a condo works best for you. Do you want to have a yard because you have a growing family, you already have kids and you have a dog and you really want the space? Do you want to have the ability to have a home office? There's so many different things that you can think about, but you want to really start thinking about like where it is that you want to live and what do you want to feel once you buy this property. You really want to know what towns fit that vibe and your needs, and then see how much homes cost in that area. And then timeline, when do you want to move by? Do you have a job placement that you have to move to? Do you have a lease expiring? Are you having a baby in the next couple months? Because knowing your why and your when to move by is going to help you create that urgency, and it just gives you room to plan. So once you have thought about all of this, your next step is to create a plan with your real estate agent. And I know that a lot of people are afraid to talk to a real estate agent when they're not yet ready. And to be honest, I think the best time for you to speak to a professional is when you're maybe a couple months out or a year out. It gives you a chance to really look at your plan and how attainable is it. They can also help you understand the local market. And most importantly, your real estate agent should be able to recommend some vendors that you have to talk to in order for you to have a clearer understanding of your path to home ownership. For example, they can recommend a really good local real estate mortgage expert who would be able to break down all your finances and create an exact game plan of what you have to do, what you have to make, how much money do you need in order to buy that property. In essence, your real estate agent really is your real estate advisor. They are the ones who's going to provide you with a game plan, but within that game plan, there are certain people that is going to be a specified expert in that specific area of the process. So as I mentioned, a mortgage lender is someone who is going to be specifically looking into your finances to get you a mortgage. And then your real estate agent is also not an attorney. So you're going to have a real estate attorney who's going to help you with all the legal aspects. You're also going to need a home inspector who is an expert at making sure the home is working properly and it's safe structurally, mechanically, and there are no environmental issues. So as you can see, there's really a lot of moving parts. So talking to a real estate advisor is the best way to start your whole journey. Now that you're done with step one, creating a budget, knowing your timelines, and knowing what kind of lifestyle you want to live in your new home, you have talked to your real estate agent or real estate advisor. Step three is talking to a mortgage lender. Again, even if you're not ready, this is a big one, because if you don't know what it is you're working towards, then you're not going to be able to get to where you want to be, even if it's not now, even if it's a year from now, 2 years from now, 3 years from now. And what your mortgage lender is going to do is really dig deeper into your finances and see if this is plausible for you to buy a property. And if not, they're going to give you advice on what you should do so that you can get there. And a lot of buyers are also afraid to do this because they think that their credit is going to get affected if they talk to a lender. But a lot of lenders nowadays are able to do a soft pull. So this shouldn't affect your credit, but it would allow them to look at what's going on with your credit. Because without this, they're not going to be able to really analyze what's going on. And also, a mortgage lender will be able to talk about all the programs that you could possibly qualify for. So if you're buying in New Jersey and you're a first-time home buyer, it's possible for you to get the $15,000 New Jersey down payment assistance grant from the state. And if you're a first-generation home buyer, you can even get additional $7,000 on top of that for a total of $22,000. And if you currently own a home and now you want to buy a bigger one, you also want to know what programs you would be approved for. You may think that you now need to have at least 20% down to buy a second home, but that's also not the case. It is possible for you to buy a new primary home for 5% down, conventional loan. So these are some things that you really want to talk about with your lender. And also, if you have a budget in mind, then they will be able to give you an idea of how much that price point is in the market today if you want to stick to that monthly budget. And now your real estate agent will be able to take that price point that your mortgage lender has given you and see if that is possible in the areas that you want to live in, with the amount of bedrooms, bathrooms, and anything that you want your new home to have, because they'll be the one who is an expert in the market that you're buying into. Lenders will typically look at 4 different aspects of your finances. One is your assets. Do you have enough savings for your down payment and closing costs? And that could be anything from bank statements to a 401k to maybe even a gift from a family member. Number 2, they're going to check if your employment history is stable. For the most part, they want to make sure that you have at least 2-year work history. And depending on the type of job that you have, whether you're a W-2, you are variable hourly rate, or you are a 1099 employee, it is going to make a difference because every single type has its own guidelines that the bank is going to want to look at. Number 3, they also want to check that you have a good credit score. So the higher your credit score is, the better your interest rates will be. And once they pull your whole credit report, number 4, what they're going to be looking for is your debt to income ratio. And what that means is there's going to be a percentage that they want to make sure your debt is versus your actual income that you bring in every single month. And even if you're not approved today, at least you know exactly what you have to do so you can make sure that you can get approved in the next 2 months, 3 months, a year, 2, whatever it may be. And now we're at step number 4. Know your non-negotiables. Now it's time to get honest with yourself. What has to be true for your next home in order for you to actually move forward? For some, it's really just sticking to their budget. If they don't get the price that they want, they're not going to get it. This could also mean property type. Maybe you're the type of person who's like, no, I am not buying a condo. I'm not buying a townhome because I don't want to share walls. Or you're someone who just wants to move in. Maybe you don't want to find something that's more of a fixer-upper or something outdated because you have to update a lot in the house. Those are some things that you really have to think about. And while we're being real here, it is possible that you may have to make some compromises. What I suggest is to write all of your non-negotiables and then kind of rank them based on priority. Your non-negotiables will be able to help you make confident decisions. And especially if you're a couple or a family. If you are both already in agreement with a lot of things on your list, then the process is going to be a lot smoother once you actually start looking at homes. And the last step is honestly to start previewing homes. And this doesn't necessarily mean going on tours with your real estate agent already, because if you're not pre-approved and you don't have a signed buyer's agreement, then it's not going to be possible for you to really look at homes privately and tour homes with your agent. But you can definitely look on Zillow, on Realtor.com. And if you had a great real estate agent, they should have recommended them sending you email list alerts for homes that come up in your price point or in the area that you want to live in. At least it gives you a little bit of idea of how much homes are going for in that town. You can also tour public open houses or simply just drive around the towns and neighborhoods that you want to live in. The more you see, the more educated you'll be on what's going on in the market and what you can actually realistically find in your price point. So yeah, buying a home doesn't happen overnight, but with a clear plan, the right support, and your willingness to start the next step really will give you a clear path. You can honestly go from feeling stuck to being a homeowner in New Jersey in just a few months. I hope you found a lot of value in this video, and if you want to know more about the buying process and the real estate market in New Jersey, most specifically in Somerset County, feel free to look at all my other videos. And if you're looking to buy a home in Somerset County, New Jersey, or surrounding areas, I'd love to be the real estate agent you choose to work with. I'm so excited to meet you. If you're ready and would love to set up a consultation with me, I will put my Calendly link down below where you can schedule a time to meet with me, or you could also email me at gabbym@kw.com. And lastly, if you enjoyed this video, please don't forget to hit the subscribe button, click the thumbs up, and ring the notification bell. Your support means so much to me. So what do you think? Did this video give you a lot of clarity? What did you learn more about your finances and what you really want? Feel free to comment down below. I'd love to hear everything that you are thinking about, your thoughts, your challenges, how I can help, and just have a conversation with you. And with that, see you guys in the next one. Bye.